Ladies and gentlemen, good day and welcome to the Q1 FY23 post-earnings conference call of Elecon Engineering Company Limited, hosted by Phillip Capital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from Phillip Capital. Thank you and over to you, Mr. Apurva.
Thank you, Peter. Good afternoon to all the participants on the call and thanks for joining for this Q1 FY23 earnings conference call of Elecon Engineering Company Limited. To take us through the results of this quarter and answer your questions, we have with us the management of Elecon Engineering represented by Mr. Prayasvin Patel, CMD, Mr. Kamlesh, Group CFO, and Mr. Narasimhan Raghuraman, CFO. Mr. Prayasvin Patel will give a brief overview of the company for the quarter gone past and then we'll open the floor for Q&A session. With that said, I would now hand over the call to Mr. Prayasvin Patel. Over to you, sir.
Thank you. Good evening, everyone. Ladies and gentlemen, a very warm welcome to our Q1 FY 2023 conference call. We are pleased to report strong financial performance during the quarter and have delivered consistent improvement in our results over the last many quarters. Discussing the results at a standalone level. The total operating income increased by 16.4% year-on-year to rupees 257.2 crores compared to 221.0 crores in the corresponding quarter of the previous year. The EBITDA on absolute basis increased by 9.8% year-on-year to rupees 55 crores as compared to 50 crores during the corresponding period of the previous year. This translates to EBITDA margin of 21.4% in Q1 FY23 compared to 22.6% in Q1 FY22. We closed this quarter with a net profit of 32.9 crores as compared to 23.1 crores during the corresponding period of the previous year, reflecting an increase of 42.4%. Let me highlight few points related to the results. The gear business witnessed strong demand from the end user industries like cement, steel, sugar, power, etc. Gear revenue includes rupees 9.95 crores from marine project in Q1 FY23 compared to 61.19 crore in Q1 FY22. On the back of our strategic initiatives, the MHE business has seen remarkable turnaround and turned profitable, which is expected to continue for the full year FY23 and ahead. Moreover, there has been substantial reduction in receivables led by our relentless focus. 2 out of 3 legacy projects are cleared and settled, whereas the balance is expected to be settled by Q2. Coming to the consolidated financials of the FY23. The operating revenues increased from 11.4% year-on-year to 327.7 crores as compared to 294.4 crores in Q1 FY22. EBITDA increased by 10.2% year-on-year to 64.9 crores versus 58.9 crores in Q1 FY22. EBITDA margin stood at 19.8% in Q1 FY23 as against 20% in Q1 FY22. The consolidated profit after taxes stood at 42.3 crores on FY23 as compared to 27.3 crores in the corresponding period of the previous year, an increase of 54.9%. Overseas revenue from Q1 FY23 is flat as compared to Q1 FY22. The same is impacted due to global logistic challenges. However, we are confident to achieve our annual overseas revenue target as we expect things to normalize. Orders on hand in overseas business is rupees 114 crores. Demand environment continues to be robust, resulting in significant ramp-up in the order booking, with orders worth 282 crores booked in gear business and orders worth 45 crores in material handling business during the quarter. In the gear business, the orders on hand is 400 crores on standalone basis and 550
you are seeing, are you seeing a case where you would be in a strong growth scenario for 23 and 24 both? And, we can see a 20% type growth rate in gears for the next 2 years, that is this year and next year?
Basically, I would not be able to comment on it. And the fact remains that right now there are headwinds from all directions. However, as of now, we are not seeing any deterioration in the inquiry levels at all.
Okay.
Which means the offers that we are giving are robust and the requirement is strong. However, as I told you, considering the fact that all the countries of the world are trying to increase the interest rates to curb inflation, we do not know how the situation would be globally. So it would be difficult to comment, but we are pretty gung-ho and strong that it should continue.
Okay. On the interest cost side, sir, from your release, it's clear that we are debt-free. Does this mean that the interest cost from next quarter onwards will be zero in the P&L, or there would be some cost? And if yes, if you could quantify the same?
Yeah, there will be some cost. Yeah, it is net debt free. What we are declaring is a net debt free. So we will have the some portion of my interest income as well as my interest expense also. We are expecting that will be in the range of 1.5 to 2 crore maximum.
Net basis.
Yeah.
Net basis as
net basis, I'm talking about a gross. In the net basis, it may be a zero after Q2 onwards.
Okay. Okay. And lastly, sir, on the gears business margins. So as we move higher in terms of the size of the business, is there a scope for improving the margins from the 20% that we have seen for some time? Is there a scope to improve these margins?
I would say yes. And the reason is very simple, that the fixed cost gets distributed over a higher turnover, and therefore it definitely would improve the margins. Okay. Normally the gear industry is very capital intensive, so the fixed costs are relatively high.
Okay. So let's say in gears, what is the contribution margin that we operate at usually?
Contribution margin in sense about the EBITDA margin?
No. So contribution margin is basically revenue minus all the variable expenditure.
So it is ranging from 40 to 45%, my variable cost.
So then
50 to 55% variable cost. Sorry.
Variable, right?
Yeah.
Which means that if you move your revenue from 1100 crores to 1600 crores, which is 500 crore extra, this 500 crore extra has a probability to generate 200 crore of extra profitability?
Yeah. Nature.
Is that correct, sir?
Yeah. Is that if you are talking about on a variable cost?
Yeah, based on whatever answer that you all gave. In that scenario, sir, what happens is the EBITDA margin starts looking like 25-26%. We are not way off the curve on this number, right?
Yeah.
It can be a 25% margin business also.
Yeah. It may generate also.
It can generate, right?
Yeah, it'll definitely be dependent on the product mix. But considering the product mix that we have today and that what we have been having in the past, yes, these figures sound true.
Yeah, they are not something which is, completely haywire. They can be achieved is what I wanted to understand.
Oh, definitely.
Okay. Thank you very much, sir, and all the best to you, sir. Thank you very much.
Thank you.
Thank you. Our next question comes from Pratik Kotari with Unique Portfolio Managers. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. So my first question is on the gross margins. If we exclude this 7 crore settlement that we had to do of the prior quarter, our gross margins have improved substantially if you compare to the previous quarter or the previous year. So Can you highlight a bit more? I mean, in this inflationary scenario, how did we manage to get such a high gross margin?
See, basically, we've had a very good control over the supply chain, and we were anticipating a price increase. So our validity of the offers, we had kept them to be very, very short. Okay, and therefore, and where we had made offers, since the prices had increased, we went back to our suppliers. To our customers and asked for an increase in prices.
But in that case, our gross margin should have stayed similar. I mean, we have done much, much better.
It is the question of how you negotiate things with your supplier as well as with your customers. So I can proudly say that our boys have done a fantastic job.
Absolutely, it's very impressive. So second question, what would be the export number for this quarter from a standalone gears?
Just a minute.
Yeah. And in the meanwhile, we have been trying for a while, and we did see some early success in terms of entering US as a geography with our gears. So just some highlight on that if you can.
We are expecting our Q2 export will be in the range of 25 to 30 crore.
Fine, but what was it this quarter?
From India.
What about this quarter? I mean, the one which went by?
It went back, it was nearly, it is 22 crore for this quarter.
22 crore. Fair enough. So your comments on our entry into US and how are we approaching that?
Sorry, can you repeat that, please?
Yeah. My question was, for a while we have been trying to enter US, and we did see some early success in terms of exporting to US as a geography, which is a much larger market. So
yes.
So just how is the acceptance? How are we progressing there?
We are doing well. There are various new opportunities that have come our way. We are seeing that we have been able to also break through with a couple of large customers who are large users of gearboxes. And when we last talked with our US marketing team, they were pretty confident that they will get some good orders from these big customers. Once we have that opening, it would open up large opportunities for us in the future.
I don't know. And so my last question, you did highlight that 2 of our 3 legacy projects we have completely closed and settled. 1 will be done now. So we have whatever those retention receivables that we had, all of that has released, or it's only the execution which is completed?
No, execution we already completed in the previous year, that we already talked. Now we were chasing for the money. Substantial amount is already, for one project we close and settle all the amount. For the second project which we close and we realize the money, only a part amount is pending related to the price difference, which is also expected in Q2 anytime.
So this 110 crores retention receivables that we had in the close of March,
Okay. And the EBITDA margins in this overseas business would be what?
EBITDA margin we can expect nearly 15%, 14 to 15%.
Okay. Okay. And so lastly, that calculation, if you can make me understand that the the order inflow, I mean the order book in the gear business was around 410 crores in last quarter, and when your inflows are higher than your execution, still the order book is down. So if you can explain that calculation, sir, both in MHE and gear business.
Sure. In gear business, generally under the India's account, we have to do some reversal of sales because of the eco terms. So that has an impact of 13 crore rupees in gear. And further, for marine, we were doing the revenue recognition on the POC basis, percentage of completion basis, under the contract accounting. So that has an impact of 62 crore. The revenue is recognized in the earlier period, and invoicing has happened in this quarter. So that is an impact of 62 crore. So that is where the gap of 77 crore is there. I think your math might be talking about the 77 crore difference.
Yeah. So the 400 crore is the real order book now, right?
Yeah.
In the standalone gear business. Or you feel that there could be further adjustments to this also?
No. This mainly is all because of the POC revenue recognition and the contract accounting. Now, as marine projects are already completed and there is nothing pending now, so we don't find such kind of impact. However, the reversal of sales and sales, particularly under the India's guidelines for the revenue recognition, may have the impact, maybe a positive side or on the negative side in terms of the revenue, total revenue sales.
So what kind of order inflows you are targeting in the standalone gear business for this year? I mean, you have already done 282 in the first quarter.
Yeah, so that same order inflow will continue for us.
I mean, similar run rate of around 300 crores for the next 3 quarters.
Yeah.
Okay. And last question is on the material handling. Now, since you are now having decent profits and turnover is also at the run rate of around 45 crores. So this business, what is the outlook for the next couple of years? Like, suppose this year, I guess you are estimating 200 crores. So next 2 years, what is the target here?
See, over a period of time, this will grow. We are expected to add also new products to this business. So I would say you should expect at least a growth of 20 to 25% year on year.
And margins?
Margin should be similar or going forward a bit better.
Okay.
I would say between 17 to 20.
Okay. That's it, sir. Thank you so much. I'll come back in the queue if I have
Thank
more
you.
questions. Thank you.
Thank you. Our next question is from the line of Bala Subramaniam with Aryan Capital. Please go ahead.
Good afternoon, sir. Thank you so much for taking my questions. Sir, in the capex front, installation of solar plants and windmills, could you please throw some light on that? So what kind of energy consumption it will replace, and what kind of, when it will be executed?
The installation of solar is already under process, and we are expected that it may about to get closed by Q3, because in monsoon we cannot do the installation. That is where. In regard to the benefit, first that will help us to go towards the green energy. That is the main benefit. Maybe in a monetary or non-monetary way we can consider the benefit. But yes, down the line we are expecting that will have result in the positive way in terms of the IRR. So we are looking for the positive IRR and payback period by nearly between 7 to 10 years, depend upon how the solar radiation and generation of the electricity.
Okay, sir. Sir, my next question, export on steel products might postpone capex plan for steel players for short term to medium term. Elecon Engineering have significant portion of order book, around 20% on consolidated basis from steel sector. Is there any short term to medium term headwinds for orders from steel sectors? Could you please throw some light on that?
Sorry, can you repeat it, because I'm not able to hear you properly.
There was some disturbance was there in the voice.
Static. Yeah.
Sir, export duty on steel products might postpone capex plan for steel players for short term to medium term. Elecon Engineering have a significant portion of order book from steel sector. Is there any short term to medium term headwinds for orders from steel sectors? Could you please throw some light on that?
We are not seeing any change, and the requirements that have been firmed up by the companies, they are still continuing to process them and execute them. So as of now, we are not seeing any impact whatsoever of this.
Second, while discussing with some experts on the steel sector because of this export duty, we believe that it is temporary in nature and may get lifted maybe in Q2 sometime.
Okay, sir. Got it. Thank you, sir.
Thank you. Ladies and gentlemen, we request participants to limit their questions to 2 questions per participant. Our next question is from the line of Sanket with KDA Securities. Please go ahead.
Hello.
Yes.
Am I audible? Yeah. Good evening, sir. Congratulations
Good
on
evening.
becoming net debt free. Just wanted to understand, currently, are we servicing any defense orders, or are we seeing any more traction from the defense segment side? And also, will our margins for the export business versus the domestic business be same, or for exports we'll get higher margins?
We have recently got an order of about 130 odd crores from the marine business or the Indian Navy. And going forward, there are reasonably good inquiries on hand. Okay. This order would be executed in a period of 2 years, the one that we have on hand. Sorry, does that answer your question, or?
Yes, it does. Wanted to understand the margins between our export and the domestic business. Are they in the same category, or for the export we enjoy higher margins?
Exports normally are giving us higher margins as of now. But I would be saying this very proudly that the domestic margins are also catching up and going to a higher level over a period of time as of now.
Understood. And for the recent government schemes announced like PLI, are we seeing any more traction on the ground, or any more inquiries? Like, how is the thing shaping up on the ground with the recent announcements which have been there?
We've not seen the impact as of now.
This scheme, I think we studied, so far as we are concerned, it is not having so much benefit compared to the obligations which are carrying under this PLI scheme.
Understood. Even from the end user side, are we seeing any more inquiries, or is it still in the study phase only and no material impact on ground?
Yeah, if you see some manufacturing setup are coming up because our gear products are being used across the industry from A to Z. So we are catering to all the industries. So that, as and when it is coming up, when
Absolutely. I'm going to sleep better now, and thank you very much, because Sunil bhai, your good wishes and your continuous support to us has always helped us in keeping ourselves cheerful and confident that we will ultimately achieve this.
Thank you, sir. Thanks for this good wishes. And sir, my question is now, because we are very totally debt free, we will be generating really good cash flow also. Your time you personally will be allocating to maybe this defense opportunity more, or you feel exports and defense both can be a very bigger opportunity, because this marine gears may be coming of some longer frequency, but I think some spares or some other products from maybe army or something. Any thought process, maybe over 2-3 years you see any sizable opportunity, and how prepared we are, or we are preparing ourselves?
As I told you, we have set up within our group people who will be looking at various opportunities for defense. This is not only in Navy but also in the Army and Air Force. And the video that you sent me about Baba Kalyani was very, very inspiring. I have been showing this, and I want to discuss this among our team and see how we can also pursue certain areas where we feel that there are opportunities. So that is one aspect. But in the business front, I believe exports has got huge potential, because we are talking about the entire globe, especially South America. There are very good possibilities apart from the United States, because South America is very similar to us, but the gear companies out there are not as matured and as capable as what we are. And we believe that the opportunities are great out there. So those also we want to pursue. However, in South America, we will have to be a bit careful as long as payments are concerned, because those are the countries where we have not dealt with them in the past.
Great, sir. Congratulations again, and really well done by your all marketing, manufacturing, finance team led by Kamlesh bhai. Hats off to you. Thanks a lot, and best wishes, sir.
Thank you. Thank you so much.
Thank you. Our next question is from Barshan Zaveri with Crown Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, good evening, sir, and congratulations on a great set of numbers. So most of my questions have already been answered, so I'll just have one question. What kind of risk do you see that can probably impact us in achieving our stated guidance? Is there some element that we should be on the lookout for, or anything? Could you just guide us on that? That would be great, sir.
Right now, the greatest risk that I perceive is the situation in the economy, because though India is been doing exceptionally well, considering the global environment as well as the domestic environment changing, even the neighboring countries have gone through a big turmoil. So the entire world is going through changes. And these changes, if they impact the economy, then, things would be a bit different. But otherwise, we feel that, we are on a very sound footing, especially because we are now at a zero debt level. So the strength of the organization is quite strong. And we believe that if we, even under the limited situations, if there is a recession, I believe exports should still be attractive to us, especially because, our prices would be lower than the prices of the companies locally in that country, especially the Western nations. And in the recession period, everyone is looking for a cheaper alternative. So quite often recession works in our favor rather than work against us, especially in exports. So they are challenging times. Being dynamic as an organization, we feel we will be able to maneuver ourselves very strongly.
Okay, thank you. That answers all my questions, and all the best, sir. I'm looking forward to seeing great results.
Thank you. Thanks a lot.
Thank you. Our next question is from the line of Sachin Kasera with Swan Investments. Please go ahead.
Yeah, good afternoon, sir, and congratulations for a very good set of numbers. Just two small queries, sir. One was you mentioned that the clients are taking some sort of a pause because of what is happening on the steel prices. So if you could just tell us a little bit about how do we exactly book the orders and how do we hedge our side of the steel when we are taking any orders?
Sorry, can you repeat it because I am not able to hear you properly?
I think, sir, you mentioned that the clients are taking a pause because they're expecting steel prices to go down, right? So I'm just trying to understand how do we hedge ourselves on the steel? In the sense, is it possible that we have already bought the steel at higher prices, and eventually when the clients confirm the orders, we get a lower realization, and hence our margin could get impacted? Anything like that is possible, or we do a back-to-back order booking only?
For the large and complicated gearboxes, we do not stock material, so it is based on back-to-back orders. But for the small to medium-sized gearboxes, they are produced from stocked material. So what we have done is we have made some advance contracts which were continuing with the prices which were there when the prices were at a lower level. During the period that there was an increase, we have given the suppliers an increase which you have seen has impacted our values which were shown in the financials. But going forward, they will again get reset to 0 levels.
So just to clarify, sir, in that case, is there a risk that are we carrying some raw material inventory which is at a higher price and against which there are no bookings, and hence as and when the order gets finalized in the small and the medium sized, our margins could have some compression in Q2, Q3?
No, the answer is no. The reason is the stocking is barely for 15 to 30 days or going almost till 45 days, nothing more than that. So that can be corrected very easily, and therefore we don't see an impact. When the prices went up, also the impact, as you see in the margins, were not there. Similarly, when the prices go down, also the impact would not be there.
Sure. And sir, you said that there's a little bit of a pause in terms of finalization of orders. You see that if this continues a little more, it can have impact on the overall numbers you are guiding for FY23, or you are very confident that despite the pause that we have
As of now, we are not exploring anything seriously. However, we want to make sure that we collect the surplus funds and park them in a way that they would give us reasonably good returns. And then, as and when the opportunity arises, we will maneuver these funds for those kind of investments if there are any further opportunities that come our way.
Sure, sir. Thank you, and all the best.
Thank you. Our next question is from the line of Ranjit Sivaram with Mahindra Mutual Fund. Please go ahead.
Yeah, hi, sir. Yeah, just a small clarification. In our press release, we have given our target of revenue as 1,500 for FY24. And some answering to one of the previous question, you told the target is 1,500 crore for FY23. Just wanted to clarify, is it for 24 or 23 we are looking at this 1,500 crore of revenue? And is it standalone or console?
The 1,500 crore turnover, which we are putting in our investor presentation, for FY24 it is on a standalone basis. Whereas now during this call, when someone was asked this question, when we replied that 1,500 crore plus is for with consolidation figure.
Okay, so 1,500 crore of console revenue for FY23 console.
Yeah.
And 1,500 crore in a standalone basis for FY24. So what will be the console FY24 target?
It will be 2,000 crore plus.
Okay. So that means our the domestic gear business, I think in FY22 was around 800 crore, should reach 1,500 crore, right?
That will reach to 1,200 crore at standalone level in FY23.
And it should reach 1,500 crore in FY24. Hello, is that right? Hello?
Ladies and gentlemen, we have lost the line of the management. Please stay connected while we get them connected once again. Ladies and gentlemen, we have the line of the management connected. Mr. Sivaram, you can proceed with your question.
Yeah, so just this, the 800 crore of domestic gear business moving to 1,500 crore in the next 2 years. That is the kind of projection which we are working on. I just wanted to reclare. Okay. And so in this, is this commodity deflation a challenge? Because last year the commodity inflation helped us because there was some 20-30% increase in the steel prices. Now the steel prices has come down and it is likely to further come down. So the realization per gearbox will come down. So your absolute volume growth and your absolute EBITDA growth will come down, though your EBITDA margins will be intact. So just want some clarity on that.
You are right, but on the other hand, we would be boosting up the sales of exports, where our margins are healthier. So we are expecting that would compensate.
Okay, I understood that, sir, but like FY22 was a year when we got a lot of tailwind in terms of this commodity price movement of 25 to 30%. So now that is deflating. So don't you think it will be a challenge for you if the commodity prices continue to come down to achieve this revenue target, though your volume target can be achieved?
Yeah, but the volume, we are expected that the volume would grow. And apart from that, as I told you, that we are trying to further increase our exports, and that would compensate margin-wise as well as turnover-wise.
Okay, sir. Thanks.
Thank you.
Thank you. Our next question is from the line of Arun Subramaniam with Ampersand. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. I just wanted to clarify one thing, that you mentioned that your demand is somewhat getting affected because clients are trying to reconcile with steel price dynamics. Isn't that a bit of a difficult thing to handle, because considering that gear is such an important thing, that the customer is waiting for to place the order because of the steel price outlook?
See, I will tell you one thing. The purchase people are always very smart. They wait for a month or two, hoping that the prices, if they go down further, then they can delay by a certain period of time. But since if you are dealing with very large projects, then the delays cannot be afforded beyond that kind of period. So what we see is that they try to delay it by a month or so, or a month or two, just to see whether the wind is blowing and whereby they can get better prices. However, when they feel that it is not changing, then they go ahead and place the orders. So it's kind of a move where they would try to find out whether that helps them or not. However, we see that ultimately they do come up and then place orders. So I mean, it's not affecting us in any way whatsoever.
Understood. But is there any improvement now that the prices are kind of stabilizing?
Improvement in which way?
In order placement and decision making.
Yes. See, as I told you, if they delay it, it's like from order, from inquiry level to an order. Normally, if it was taking 15 days, what we find is now it may be taking 21 days or 30 days. That is the only difference that is happening. Okay.
And so the question is relating to your this clarification that you gave, that about 7 crore of settlement. So if I adjust for that, so your margin would have been 200 basis points higher, that is 22%. Is that correct?
Yes.
And that really is the sustainable margin that we should be looking forward to?
Yes.
Understood. And so the last question that I wanted to kind of clarify, so this exports that you do you do that entirely to your subsidiary, or you also export to through independently, that is directly?
Both.
And the bulk of it is through subsidiary, or how should I look at it?
See, it is both. It depends on which country and which client. Quite often the invoice is invoiced to our subsidiary, and the subsidiary then invoices to the customer.
Understood. And so, as you said that because of this Ukraine conflict, your subsidiary performance was a little affected, that is, it could not really grow. And all your guidance which you have given, including 400 crore for subsidiary, is probably conservative to the extent that you are not really looking for any normalization. Otherwise, the number would have been better. Is that how you're looking at it, or?
No, there are inquiries on hand, but there also because suddenly, because the interest rates have gone up, and quite often the energy rates have gone up through the roof. Plus, on top of it, the freight cost has increased drastically. So the whole scenario has become very it is full of turmoil, and therefore quite often we see that customers are feeling anxious in ordering immediately. So they are again quite often pausing. Okay, so but we have very good inquiries on hand as of now. So we believe that within the next 3 or 4 months, we will get reasonably good orders coming through.
And you have increased your employee base, as you said that you have increased your business development and meaningfully. So the benefit of this initiative, which kind of led to this jump in employee cost, that is something which will come with a lag. That is, your revenue and number will be much better because of this expansion of sales force, probably 6-9 months down the line, or they will, or you will do much better even before that.
See, we have not only increased the manpower in the business development, but we have also increased them in the supply chain and in the engineering. Okay, the reason is we would like to execute orders faster so that we are able to support our export thrust in a better way, because today the logistics is consuming a much higher time period than before. Okay, especially shipments to Europe and USA are taking much longer than before. And so we would like to cut down the time period for processing the orders. As well as we believe that, going forward, if we have to grow, we will need this additional manpower to see to it that we are able to sustain the growth and not get into any kind of situation where we delay the execution.
Understood.
And we believe that this increase will get compensated by the increase in turnover.
Thanks a lot, sir.
So the percentage cost of manpower over a higher turnover would practically remain same or might even go a bit lower.
Got it. Thanks, sir. Thanks a lot. All the best.
Thank you.
Thank you. Our next question is from the line of Karthi with Suyesh Advisors. Please go ahead.
Sir, good evening.
Good evening.
A couple of things. One is, can you talk a bit about the 2 U.S. customers that you were referring to, large ones? What is the profile of these customers? What kind of requirements do you have? And therefore, how should one think ahead on that?
Sorry, can you repeat your question, because I have not been able to hear it properly.
In the early part of your commentary, you spoke about negotiating with a couple of large U.S. customers who are big users of gas. So
yes.
I'm just trying to understand the profile of these customers and the nature of requirements that can emerge from there.
Yeah, these are large customers in steel and cement sector. First of all, the biggest challenge has been that to get our brand and company accepted with these customers. Since we have international customers even in India with big brand names, so it is helping us because the references in India are also acceptable to the client. Normally, when these clients want to try you out, they give you a small order, okay, of smaller size gear units, put them to test, and if they work satisfactorily, then you are an accepted brand name, which is accepted even for the large projects, large quantities, or large gearboxes. So this is the first step, is to get a small order from them and get yourself accepted. So this is the phase we are in, and we believe that the gearboxes of ours would be working well, and then that would open up large opportunities in the future.
Sure. And the second thing is on the marine order. Is this already included in the 280 crores of inflows that you referred to, or is this after that, after the quarter?
No, it is not included. It has just been received.
It is
I would say in the last 2 or 3 days.
Great. Great. The third part of it, sir, is that the 7 crore negotiation that you spoke about. Does it often happen that your customers do a back and forth and haggle on price, at the time of settlement, or how exactly does it work? It's a bit odd for you to settle a, old contract after the period. So just curious to understand why this happens.
No, this has happened just because of that, the steep increase in the price from January to April, which our vendor has suffered, and accordingly they just came and we consider their request. Because all vendors are generally, most of our vendors are associated with us last more than 2 or 3 decades. So we also, and they supported us during our challenging time. So it is also our duty to hear for their take wherever it is there and support.
Right. Sure. And lastly, sir, on the capex that you spoke about, just want to understand one thing. I heard you about preserving cash for potential requirements. But the solar power thing, I hope that's not necessarily a tax-saving device, because that would be a fairly, myopic view of capital allocation. So just curious to understand.
No, it is not for my tax-saving avenue. I don't think now any such kind of tax avenue is available. It is only towards our responsibility towards the green energy and environment sector. We also are exploring our company towards the ESG, and that's a part of our process towards the ESG.
Right. Okay.
See,
Thank you.
Our intention is to see to it that we minimize our power bills going further, because when there are good times, if we make these investments, then during the recessionary trends, those kind of expenses are not there.
Right. Sure. Wonderful commentary, sir. So very best wishes.
Apart from that, it is our environmental responsibility also. We are seeing the global warming situation. So we feel also very conscious that we have to do our part of the aspect where we go as green as possible and the environment situation.
Sir, just belaboring the question asked earlier by Sachin, which is you may end up having 600-700 crore of cash over the next 2 years based on the cash flows. Fairly substantial amount. Would there be an opportunity for you to deploy such large cash in your business at all?
Our intention is first to collect the cash, okay, because as quite often what happens is when you have been in such a severe debt situation in the past, one wants to be a bit careful. So we will sit on the cash for a while and then look for opportunities at the right moment.
Okay. Thanks very much and best wishes.
Thank you.
Thank you. Our next question is from the line of Prateek with KDR Securities Private Limited. Please go ahead.
Hi. Thank you so much for taking my question. I just want to know a little macro view about, how the capex is shaping up. The steel prices, as we know, after 2020-21, they had shot up, then they came down, but they are still higher than what they were, pre-pandemic. So I think in this kind of a scenario, everybody benefits with the capex. I think capex should be better this time. So are we seeing that happening? What is your view, sir? That would be, it would be good to have your view on this one.
I believe that the capex cycle is here to stay because, it's a very cyclical thing. And India has gone through that cycle where there were investments in the past, and for the last almost 7-8 years, there was a lull period in the capex cycle. So now the things are turning around. And, India being a country where the growth potential is very high, I believe that this capex cycle everyone, who is in the management always feels that India is poised again to grow. Okay? We all know that the per capita cement consumption, steel consumption, everything is at a much lower levels than what they are at the international levels. So considering those facts, I believe that more and more investments have to come in to take care of the demand. So I am a firm believer that India has no choice but to grow.
Got it, sir. Got it. All right. Cool. Thank you so much.
Thank you.
Thank you. The next question is from the line of Disha Kansara with Molecule Ventures. Please go ahead.
Hi, sir. So basically, most of my questions have been answered. I just wanted to know what is the order inflow for this Q1 FY23 quarter. Hello. Hello. Am I audible, sir?
Okay, we've lost the connection from the management. Please stay connected while we get them connected once again.
ये वो वाला जो तेल
Ladies and gentlemen, we have the line for the management connected. Ms. Disha, you can proceed with your question.
So my question was, what was the order inflow in Q1 FY23?
Yeah, it was 283 for gears and 40 for material handling.
Sir, this is for Q1 FY23, right? I want to know about Q1 FY22.
22.
Oh, I think that, can we get back to you later?
Sure, sir, no problem. Sir, my second question was, what kind of opportunities do you see in HGD system?
Sorry, can you come back again? There is a lot of static noise behind.
Sir, my question was, what kind of opportunities do we see in the FGD system?
The FGD systems has a good potential not only for the gears but also for material handling. We are not directly involved in it, but we expect that over a period of time we would create some alliance to pursue that.
If you can just put your phone on loudspeaker mode, please.
Okay, sir. Okay, sir.
Thank you.
Thank you. Our last question is from the line of Ritesh Chaudhary, an investor. Please go ahead.
Boss, Hello?
Yes.
Hello?
Hello.
Yeah, Ritesh.
Yeah.
I can hear you.
Yeah. Hi, Srihasin bhai.
Hi.
Congratulations for the decent turnaround in MSC business and good order inflow. So just wanted to know that 130 crore of order which you said has come in for the marine business. It is not added in the current order book, right?
No, it's not been added because it's just coming. It is fresh out of the oven.
Yeah. So that's the only question from my side. Rest of all the question has been answered. Thank you.
Thank you. Thank you so much.
Thank you. This concludes our question and answer session. And now I would like to hand the call back over to the management for closing remarks.
Thank you. Basically, the first quarter results have been robust, and going forward, we are not seeing any challenges till the year end because we have reasonable orders on hand. As long as the economy is concerned, we believe that the capex cycle which has started will continue, which will give us a reasonably good order inflow. Apart from this, we are seeing that the inquiry levels at the export end are also healthy, which would be converted into good orders going forward. And we believe that we are poised to now grow and also see to it that we generate sufficient cash for us so that we remain a debt-free company for a long period of time. So with this, I would say that we are very thankful to you for taking so much of interest in Elecon Engineering. And if there are any questions that you come across in the future, do not hesitate to communicate to us, and we will get back to you as soon as possible. So thank you all, and wishing all of you the very best. Thank you.
Thank you. On behalf of Phillip Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Call recording.